Welcome back to the channel, everyone. It's great to have you all here again as we dive into the latest price movements, technical levels, and future projections for Dash. Over the past few weeks, we've seen quite an interesting range of price action, and there are a few critical points I want to make today. We are looking at potential lows, possible areas of support, and how Dash might behave in the coming weeks. It's important to remember, though, that nothing here is financial advice. I am not a financial advisor. Everything I'm sharing is my analysis and perspective based on market behavior, technical patterns, and historical price action. That said, the scenario we are currently observing in Dash presents some really exciting opportunities, and it's worth exploring every angle before making any trading decisions. Now, let's start by revisiting some of the key theories I've shared in the past about Dash's price movements. When we were at the previous high, we anticipated some resistance forming, and our theory was straightforward. From a low to a high, if there was a pullback, we were likely to see support either around $93 or $69. My personal view leaned toward $93 as the support zone. Honestly, I couldn't imagine the price dropping all the way to $70, but the markets are unpredictable, and we've witnessed significant declines before. A drop down to $70 would represent about a 54% correction from the recent highs. Now, that might sound extreme, but in the context of cryptocurrency, especially during periods of strong growth, such corrections are not unusual. Even during bull markets, it's common to see swings of 30% to 60%, sometimes happening in rapid succession. So, a 54% drop, while significant, is still within the realm of normal market behavior for high volatility assets like Dash. If we focus purely on Fibonacci retracement levels, there are two primary zones to consider: the 0.236 and the 0.382 levels. These are widely recognized in technical analysis as key points where price can either reverse or find temporary support. For Dash, stopping at the 0.236 level is entirely possible, but when I analyze the longer-term price structure and historical interactions, it doesn't make as much sense from a Fibonacci perspective. That said, markets are never perfectly rational, and prior resistance and support levels often come into play. Looking back at previous highs and lows, there is some level of significance around these areas, meaning that the price could pause or even bounce here. So, while my analysis suggests that a deeper retracement to $69 is likely if no other support intervenes, it is entirely possible for the price to stabilize around $93, especially given the interaction with prior resistance zones and historical price behavior. It's essential to highlight that when we discuss potential lows, this is not a prediction of imminent disaster. It's merely an acknowledgement of plausible outcomes based on historical patterns. Right now, where we stand, Dash has already experienced substantial growth. From a low in June to recent highs, we've seen an 8.6x increase, which is phenomenal by any standard. Such extraordinary moves are usually accompanied by brief corrections or consolidation phases, which help absorb excess momentum and prevent irrational overextensions. So, if Dash does experience a pullback to $69, it's not necessarily negative. It could simply be a natural part of the growth cycle, providing traders and investors with another opportunity to enter the market at a discount. Looking ahead, the path for Dash seems to involve some short-term consolidation before another leg up. In the near term, we could spend a week or two consolidating, potentially bouncing between 91 cents and $140 before breaking out toward new highs. The key trigger to watch for is the price closing above $135. Once we consistently close days above this level, it becomes more plausible that we could see prices surge toward the $230–$330 range by the end of November. If for some reason the consolidation extends longer than anticipated, perhaps spilling over into December, the potential for higher prices remains intact. It's just a matter of timing. The overall bullish trend is still strong, and the current pullback is likely a temporary pause rather than a reversal of the longer-term uptrend. When analyzing shorter timeframes, such as the 1-hour chart, we can see some bearish signals emerging. The RSI is showing lower highs and lower lows, indicating a downward sloping trend. Stochastic indicators are also bearish, and while the MACD is showing bullish divergence, it is still generally bearish. This suggests that a minor pullback or sideways movement is likely in the very short term. However, even with this bearish pressure, we are approaching areas that have historically acted as strong support. These levels have been tested multiple times in the past and have proven to be effective at halting declines and setting the stage for subsequent upward movements. This creates a scenario where even if we see a small dip towards $69, it could represent a buying opportunity rather than a point of concern. Traders looking to enter the market may find this an ideal moment to position themselves for the next leg higher, particularly if they are patient and wait for confirmation signals such as bullish divergences or oversold conditions resolving. Expanding our perspective to daily and weekly timeframes provides further clarity. On the daily chart, the RSI and stochastic indicators are in areas that have consistently acted as bounce points. The MACD on this timeframe is bullish, reinforcing the idea that the underlying trend remains positive. Weekly charts provide even stronger support for a bullish outlook. While stochastics may occasionally show temporary bearish crossovers, the weekly MACD is overall bullish, and historical patterns suggest that any pullbacks are likely to be short-lived. These higher timeframe indicators provide a sense of confidence that Dash's current consolidation phase is normal and not indicative of a prolonged downtrend. One important point to emphasize is the concept of higher lows. In previous bull cycles, we've seen Dash establish lower highs and then bounce to form higher lows, which is a critical characteristic of a strong upward trend. If the current pullback establishes a higher low near $69, this could set the stage for a more substantial upward move, potentially surpassing previous highs. Price action often repeats in cycles, and recognizing these patterns allows traders and investors to anticipate potential opportunities. Dash has a long history of following these types of cycles, where temporary corrections are quickly absorbed before the next phase of growth begins. From a historical perspective, prior cycle highs provide key benchmarks for setting expectations. When analyzing the golden ratio zones, which align with Fibonacci extensions, we can see that Dash's price movements have consistently respected these levels. Last cycle's highs interacted perfectly with the golden ratio, which is why resistance was expected and observed at those points. Understanding these historical interactions helps contextualize current price behavior and offers insight into potential future movements. By examining past cycles, we can anticipate likely support and resistance levels, which in turn helps manage expectations regarding where Dash may head next. Looking forward, the end-of-month outlook appears particularly promising. If consolidation concludes within the next week or two, the conditions could be ripe for a move toward the $230–$330 range. Once key resistance levels are broken and price begins closing above $135 consistently, bullish momentum is likely to accelerate. The potential for reaching all-time highs becomes increasingly realistic, provided the broader market environment remains favorable. Based on historical cycles, technical indicators, and market psychology, Dash has the potential to reach highs above $1,600, and in more optimistic scenarios, we could even see prices approaching $6,000 or higher. These projections, of course, depend on market participation, investor sentiment, and the overall macroeconomic environment. When considering the short-term volatility, it's essential to acknowledge that dips of 10 to 15% are not uncommon and can even present strategic buying opportunities. For instance, a temporary decline to $69 represents a roughly 12 to 14% drop from recent highs, but this is still within the context of a longer-term uptrend. Traders who recognize this as a discounted entry point could position themselves to benefit from subsequent rebounds. Historically, Dash has demonstrated resilience during these pullbacks, often recovering quickly and continuing its trajectory toward higher highs. This pattern highlights the importance of patience and strategic positioning, rather than reacting impulsively to minor corrections. Technical indicators across multiple timeframes reinforce this balanced view. While short-term charts may show bearish pressures, daily and weekly indicators remain bullish. This multi-time frame analysis is crucial because it prevents overreaction to temporary fluctuations and provides a clearer picture of the broader trend. Traders and investors should consider both immediate price action and longer-term trends when forming strategies. This approach allows for more informed decision-making and reduces the likelihood of misinterpreting temporary market noise as a fundamental shift in trend. Additionally, it's worth noting the psychological aspects of support and resistance. Price levels that align with prior highs and lows, Fibonacci retracement zones, and historically significant points often carry psychological weight for market participants. These levels act as natural magnets where buying or selling pressure tends to accumulate, leading to potential reversals or consolidations. For Dash, current support zones around $93 and potential lows near $69 are likely to attract attention from traders seeking favorable entry points, further reinforcing these levels as meaningful benchmarks. Looking at the broader market context, Dash's performance is intertwined with overall cryptocurrency trends. While individual altcoins often move independently, broader market sentiment can influence the strength and duration of trends. Positive sentiment in the cryptocurrency space can accelerate upward movements, while periods of risk aversion may extend consolidation phases. By monitoring market-wide indicators alongside Dash-specific analysis, traders can gain a more holistic understanding of potential price movements and better anticipate turning points. In terms of trading strategy, the current phase suggests a combination of patience and opportunistic buying. Traders should be prepared for short-term consolidation, minor dips, and potential bullish bounces. Positioning for the next leg up involves identifying key support zones, monitoring technical indicators for confirmation, and remaining disciplined in execution. Those who adopt a long-term perspective may find that temporary pullbacks are not threats, but rather opportunities to accumulate positions ahead of significant upward moves. Finally, it's worth emphasizing the importance of observing price action in real time. While historical patterns, technical indicators, and Fibonacci levels provide valuable guidance, markets are dynamic and can defy expectations. Continuous monitoring allows traders to adjust their strategies based on evolving conditions, ensuring that decisions remain aligned with actual market behavior rather than static predictions. For Dash, staying attuned to hourly, daily, and weekly charts provides a comprehensive view that balances short-term volatility with long-term trends, maximizing the likelihood of informed, profitable trading decisions. In conclusion, Dash is currently experiencing a natural consolidation phase with potential support zones around $93 and $69. Short-term indicators show minor bearish signals, but daily and weekly trends remain bullish, supporting the likelihood of higher prices in the near future. Consolidation between $91 and $140 over the next week or two could precede a breakout toward $330, with the potential for all-time highs later in the cycle. Traders should monitor key levels, watch for confirmation signals, and remain patient during temporary pullbacks. While dips of 10-15% are plausible, they may present buying opportunities rather than cause for concern. By combining multi-time frame analysis, historical cycle insights, and awareness of market psychology, traders and investors can navigate the current Dash landscape effectively and position themselves for potential gains as the uptrend continues. Dash remains poised for strong growth, and the current consolidation is a strategic pause rather than a reversal, offering opportunities for disciplined, informed trading and investment.